Hey, everybody.
Oh.
John C.
Denise Richards and the lovely Lulu.
Hello. Welcome back. Thanks again. All things home here on our videos. This is where we have a lot of fun, and it's basically a runway show for Lulu's outfits.
Pretty much.
And today she's got a beautiful outfit on. It's like a hoodie with a jean skirt.
Yeah.
What else we got going on there?
She's a little gangster ballerina.
She is a gangsta ballerina. We need gangsta signs. Good. Well, welcome back.
Is.
We love Lulu.
Yeah.
Thank you for watching our videos. Even if it's only for Lulu, thanks for hitting the like and subscribe button. We appreciate you doing that right this second. So go ahead and do that.
Yes.
I want to jump right into our show today. We're going to talk about the real estate market. I wanted to hit on a little bit last week in our video, but I forgot to do that. And we've got a graph that we're going to put up on the screen right now. Now, the graph that you're seeing is Market Watch. It's from the MLS. So this is like stuff like every time a realtor makes a home pending, active, expired, price reduction, whatever it may be, this graph is updated right away.
It's real time.
Real time. It's very accurate. It's everything that goes through the MLS. So it's fantastic to use. So I want to hit on a few things just to help people who are a little fearful right now.
Yeah.
There's a few people that have uncertainty, which a lot of times calls for fear and anxiety. And I want to help ease your anxiety if I can do that today. Now, the graph that hopefully you're seeing on your screen is the things I want to focus on. New listings compared to pending. Just those two. So in other words, what came on the market and what went pending. Hasn't closed yet, but it's gone pending. I want to talk about those two things specifically. Now, this graph is all the homes from Naples all the way up to Fort Myers. So this includes Naples, Bonita, Estero, Fort Myers, all of that area, basically all of Lee and Collier County. So on this graph, we see that new listings, 224 homes came on the market in the last 7 days.
That's better than where we were.
Much better than where we were. We were low on inventory.
Yeah.
We were crazy low. We had like less than a month's supply of inventory.
Right.
Healthy markets closer to 4 months supply, right? 4 to 5 months. Pending, so how many went under contract last 7 days? 214. So the difference is only 10 homes. So 224 came on, 214. So the inventory graph, the chart should be slowly going up, like super slow, that we'll see probably at the end of this month. And we look at it in August, we'll see that July probably will almost even out with inventory, which we actually need inventory.
We do. We are at a 9 million house shortage right now.
Yeah, not in Naples, 9 million, but over the United
overall
States.
the United States.
Yeah, the
yes.
United States. So we need inventory.
Yeah.
So this is a good thing. People are freaking out
Yeah, they are. They're
Over
they're
a good
afraid
thing.
over a good thing.
because they don't know it's a good thing.
They don't, and they're busy watching mainstream media, which has
Stop.
got everybody terrified that we're in a bubble or that values are going to break. The reality is that we're going to just now start to see the normal rate of appreciation that we saw pre-pandemic.
We're going back to normal.
As a matter of fact, Zillow just posted their forecast for the next 12 months. They anticipate a 7.8% appreciation in real estate.
There you go. So home prices, based on what Zillow is saying, I've seen a similar number from Redfin. I think they were thinking maybe about 3 to 4%. But from what I'm seeing, and like what you just said with Zillow, most of those companies are projecting still an increase in home price. Now, do experts sometimes get it wrong? Of course they do. But based on the numbers, and when I say the numbers, pending, active, those homes that are coming on and going off and selling here in this area, the turn is still happening.
That's right. Real estate is still a great source of financial wealth.
Great source of financial wealth. Well said. So anyways, enough about the market there, unless you want to say something else about
No,
it.
that is perfect, John.
It was perfect.
That's
So here we are.
John.
That's me. So here we are at the end of July, and I want to hit real quick on ARMs. This came across my desk the other day. I say across
Not
my
these
desk.
arms.
Not these arms. And it wasn't really a desk. It was my computer. It was just an email. But it was an article from the Florida Association of Realtors. They send awesome reports out all the time. So this one was on ARMs. So first of all, tell the audience the difference. What is an ARM, and then also what's a traditional type loan? What's the abbreviation for that again?
A fixed interest rate mortgage is
So
going to
fixed and
have
ARM.
a fixed interest rate for the length of the loan, 30 years, 15 years, however you finance it. Adjustable rate mortgages are going to have a fixed interest rate for a short period of time, be it 3, 5, 7, 10 years, and then it will become adjustable. Within that adjustable rate mortgage, there is caps on how high that rate can go and how low that rate can go.
I always forget about that.
Right now, because it's tied to a different index, the adjustable rate mortgage rates are lower than the fixed.
There you go.
And it wasn't like that there for a little while, but
No.
now the market has changed somewhat. So if you are looking at buying a home, take a look at an adjustable rate mortgage. And
Yeah.
depending on how long you plan to stay in that home, a loan officer can help you determine which would be the best one for you.
So this article, the title is Buyer Loan Option Tainted by Great Recession. So when we went through our last housing bubble crash issue, right, back in 2006, 7, 8, a lot of people were getting ARMs.
Yeah.
And they got into an issue there with a lot of those, right? So they were tainted.
Big problem there because what happened was they were overextending credit. They were doing adjustable rate mortgages that actually resulted in negative equity. So your mortgage balance would go up.
That's not good.
And a declining real estate market, and then we had a housing crisis.
Yeah. Big issue.
So they are not like that anymore. Adjustable rate mortgages are part of a qualified mortgage, a QM product that is backed by Fannie Mae or Freddie Mac.
That's good.
Yeah, so you aren't going to see those horrible loans like we saw back in 05, 06.
So right now, I saw earlier today, interest rates are in the mid-5s for fixed. Okay, on a 30-year ballpark, right? If somebody's going to get an adjustable rate mortgage, now that we kind of have figured out what that is, right? It's a rate that can change. And how often can it change? Can they get a 3-year?
Yeah, it'll say, like I say, stay fixed for 3, maybe 5 years, 7 years, and then it becomes adjustable.
Yeah.
So there's different terms on that, but they're all amortized over 30 years.
Great. And so if they get a 3-year adjustable rate loan, that interest rate can be lower than that mid-5 range.
Correct.
You may be in the 4s. And the longer you draw that out as adjustable rate, you may be on a 5-year. And then what happens there, you may have a little bit higher than maybe a 4-point something, and then 7-year a little bit higher, and then if you get a 10-year, you may be close to a 5 or over a 5.
So the longer the term of the fixed part of your adjustable rate mortgage, the higher the rate. The lower the term of the fixed portion of your adjustable rate mortgage, the lower the rate.
Yeah, perfect. So I hope that makes sense to you. It's adjustable, just know that, and it can only adjust a certain amount when it does adjust, right? So ideally what people will do, and I think the advice that a lot of realtors will give on adjustable rate mortgages, if you don't want a 5.5% loan, get an adjustable rate, and hopefully the market in regards to interest rates will drop back down to low 4s or somewhere there. And then at that point, get your fixed rate. Refinance.
Yes.
Save a 1.5% or 1%, whatever it may be, and just get into that 30-year long-term fixed.
And that brings up another point. So you do go into a mortgage now and say the rate is higher than what you ideally wanted it to be, and you find that you're going to refinance later on. And then you think, well, gee, maybe I should just wait. But what about that rate of appreciation we just talked about?
Yeah.
That far surpasses any cost that you're going to have
Yeah.
over the next 3, 5, 7 years of your adjustable rate mortgage, for example.
So the appreciation on your home, if that continues to go up like we've seen over the last basically 10 years, homes have appreciated in price. You miss out on that if you wait and sit on the sideline. And I think that's a great point as well, too. We always have to think about that in regards to home and building value in your home as well, too. Talking about homes, and anything else you want to hit on adjustable rate mortgages before I move on to the next part?
They're not scary. That's all.
Don't be scared.
Yeah, and make sure you're talking to somebody who really understands them.
Yeah, like Denise or Lulu. Either one will help you with that. So let's talk about this leading into our gal we want to talk about today. We want to recommend somebody to our audience, somebody that we know well. Talk about Caroline.
We are going to connect you right now with a world-class bookkeeper. Caroline Passamore with CRP Specialists is your go-to for all things bookkeeping.
She's the go-to.
If you have gone to your CPA with books and papers and boxes of receipts and he's like, you need a bookkeeper, you need Caroline Passamore with CRP Specialists. She's amazing.
She is amazing.
She's in our network too.
She's in our network. She's on our Thursday Fort Myers team.
Yep.
She can help you with your bookkeeping. You don't have to be in Fort Myers. She can help you wherever you are.
Virtually anywhere.
Virtually. We are in a virtual world. Put on your little virtual goggles. She can help you.
We have COVID to thank for that, probably.
Thank you, COVID.
Thank you.
We're so grateful for you. Can we say COVID, or are we going to get banned off YouTube for saying COVID?
I don't know.
Watch out.
Might come out
So anyways, thankful. We want to talk about something we're thankful for today, and not me specifically, but Denise would like to talk about something she's thankful for. So what are you thankful for?
Well, I have been playing Russian roulette with the sun for the last 53 years living here in Florida.
We have the sun in Florida.
A lot of it.
And you've been in Florida a lot of your life.
Almost all of my life. And they said that this July is the third hottest summer on record.
Really?
Third hottest July on record.
Wow.
I literally passed out, fainted the other day from the heat.
You did?
I did. But more importantly is the sun and wearing sunscreen. So you might see I'm sporting a beautiful Band-Aid on my forehead.
It is beautiful.
It is gorgeous.
Yeah.
And it is a cancer spot. And what I'm thankful for is that it's not melanoma.
Oh, that's good.
No, it's squamous cell. So they can readily take care of it, but my point is wear sunscreen. And my doctor told me that it's not about what I'm doing today in terms of wearing sunscreen. It's about what I did from the time I was 18.
Ooh. Yeah, so young.
Yeah. So that's what I'm grateful for. I'm thankful that I've made it this long with my first spot.
Yeah.
And it's fixable.
And you're still kicking. It's
Yeah.
still fixable. I'm thankful it wasn't on your nose, because this would be a weird episode if you had a Band-Aid on your nose today. That would be kind of weird. So I'm thankful for that.
I thought about that.
All right, that's it for today. Hopefully you understood arms. Last video, by the way, we talked about some information that I think you should check out as well, too. There's going to be a video that's going to pop up here or here, so watch that. It'll keep you updated on other things outside of just the arms that we talked about today. And we look forward to seeing you. Hit the like and subscribe before you leave today. And we hope you guys have a wonderful last few days of July. Talk to you soon.
Over and out.